Thank you for joining us. We've had 3 weeks of hectic news flow, budget, Adani group of stocks, earnings. Next 2 weeks, we don't have too much planned calendar events. So do you think it'll be back to basics now? Valuations, earnings, technicals, flows?
Yeah, it is, and I think these days the most important data globally has become the US CPI data, and which typically sets the trend. So normally markets run in nervous running into that event, and if they see that CPI is actually coming under control, then markets tend to do well. So I think that kind of phenomena will uh, return now because as far as the result season goes, that's more or less over. So, and most companies have said what they want to say. So, markets don't have much of triggers. So, I think it will be specific stocks, specific sectors, etc. And those sort of things will continue.
Right. Let's focus on earnings then, Sandeep. And clearly, ABB with its decadal margin levels, and that's pretty much the trend that we've seen across the cap good space as well. Do you think there's still opportunity to buy into some of these capital good names?
Yeah, capital good companies have been doing well. They have been getting good orders, and execution also has been strong, and margins have now started to move up as the material cost issues have started to reduce. The only issue, as I've repeated, for people who could not buy early into many of these stocks is that they are not giving any opportunity for new investors to get in terms of a correction. So ABB results were exceptional, but then some part of that has already got factored into the price. So people will need to wait for opportunities to get in that because looking into what growth they have shown as and the carry forward order book. So this year growth might be slightly moderate, but then still it will be reasonably strong.
Number which frankly is standing out for me, and that is BHEL, and the second one is Balrampur Chini. Now BHEL has been this poster boy in the PSU capital goods space, at least in the second half of last year. Look at BHEL, just because everything was in the PSU space and capital goods space was going higher, BHEL also joined the party, so to speak. But frankly, if you look at the numbers what BHEL has reported, unlike ABB or Thermax, the numbers were not that strong. Second, Sandeep, a stock which you track, that's Balrampur Chini. Now, sugar was supposed to be in a bull run, but numbers do not match up with the kind of underlying sugar prices what currently are there. What went wrong and what went right for Balrampur Chini for the quarter gone by?
So I think the sugar cycle went through a downturn in terms of how the companies did, and now the upturn will start. So I think the last quarter, many of these companies faced issues related to late rains, lower production in the initial months, etc. And I think those were the issues. But I think those are more backward looking. UP sugar companies, in my view, should do well given the fact that there is expectation of lower production from Karnataka as well as Maharashtra given weather issues, while UP sugarcane production now seems to be strong and the ethanol story is obviously there. So I think most of the events are backward looking. The only spanner in the works sort of could be if the state advised price increases and that will impact profitability, and which is something which we don't know what the government will do. X of that, I think things are okay for the sugar sector in terms of an outlook.
Go back to Paytm, and not for numbers, but purely that if you look at Friday's block deal, Alibaba has sold its entire 3.5% stake in Paytm, which was worth 1,300 crore. Paytm has two large investors, Alibaba stroke the Ant Group, actually not Ant, it's Alibaba to be specific, and then SoftBank. SoftBank has been reducing their stake, but Alibaba is now completely out. So Sandeep, let's understand Paytm for a minute. Path to profitability is well defined, and the overhang of anchor investor now seems to be reducing. Do you think the problem of plenty which Paytm had, let's say a quarter ago, 6 months ago, all of them are getting addressed one by one?
And because whoever is buying Paytm needs to take a call on why they are buying the stock. So now there is the core payments business that's slowing down significantly. The revenue growth out there was very muted. The second part is the loans they initiate. They're earning some 2.5%, 3% commission on that. The entire thing they are counting as revenue, and most of it flows to the P&L. And then you have to ask the question, how sustainable is that business and what kind of PE can you give a pure fee income of loan initiation? So I just I don't know the reason for such excessive bullishness. So they might show profits, but what is the sustainability of this business?
Speaking of some of these new age tech companies, let's hear it from Karan Taurani as well. He talks about some of his top bets within this space.
So I think at these valuations, Zomato, could be a kind of a compelling buy, because if you look at the stock price, I think last 3 months it's come down by close to 25-30%. And if you look at it in terms of EV/EBITDA valuations, just on a forward basis, and assuming that they achieve this, 4 to 5% of EBITDA as a percentage of GOV, what they've been guiding for over the next 2 to 3 years, the stock is currently trading at somewhere around 25 to 28 times EV/EBITDA for the food business. So there is value buying here, as far as the standalone food delivery business is concerned.
All right, meantime, let's get in some technical trades going as well. And Naresh, let's find out what your outlook is on some of the individual buzzers then on Friday's trading session. Within the broader market, some names that did manage to stand out include a Piramal Enterprises, and you also had a KPIT Tech that was a buzz. What are the charts indicating here?
So Piramal Enterprises is interesting. If you look at the price action for the last few months, every time the stock has gone to 780 to 810 levels, it has bounced back. It has made almost say 5 to 6 bottoms around that area. In the interim, the tops are placed around 920, 930. It came very close to it yesterday on Friday. So if it can sustain about 920, that would be a major trend change for the stock. And yesterday was a very large volume day, so that is more interesting. So the volumes in the last two sessions, one post the numbers where we saw an intraday recovery in the stock, and yesterday was almost 5x the general volumes. So out here, in case of a dip closer to 870, 880 is where one should be looking out for a buy in the day with a stop loss at 860, and then watch out for 920 if it crosses, maybe add more positions after that.
The report from Morgan Stanley on PB Fintech, and what they are making a case that PB Fintech is a buy. Price target has been upgraded to 705. Currently, it is at 525. Some of these stocks in January end or middle of January, when anchor investors was selling out, they just got smoked. Paytm slipped below 500. PB Fintech almost went to 320, 330. Zomato came almost to 44, 45. So some of these stocks, when the anchor pressure was there, I think they simply lost its bottom, so to speak. But I'm going to go back to one Adani group of stock, Sandeep, which perhaps which deserves some discussion. Ambuja. Now, Ambuja is not an original Adani group of stock. It is a company which Adani Group acquired last year. It's a company which has a predictable track record. It's a sector where you know that the demand, at least for next couple of years, is going to be strong and static. It's a company which the balance sheet of Ambuja and ACC is also not very leveraged. Why do you think Ambuja and ACC are underperforming? At 365, if one is looking at buying into Ambuja, or at the current juncture of ACC, are these stocks a good contra buy? Do you think they're suffering because of technical overhang, not because of a business cycle downgrade?
Yeah. So your last sentence actually sums it up, because it's more technical overhang, because there is fear in the minds of the market participants that what if some pledge shares come in to sell and there's post selling, etc. So I think that always comes up when the entire group comes under question. On the other hand, as far as pure fundamentals go, I think they are reasonably well placed. Cement sector overall, I'm not so gung ho, because volume growth will be there, but supply increase is very, very strong next 2 3 years. So I don't think these companies will have much of pricing power. But given that Ambuja fell from 600 odd, I think at the peak, to 320, 330, so we also picked up something around those levels. But uh, I'm not looking at very huge targets. I think it will be more like something like a swing kind of investment.
Viresh, Ambuja, I think, is an F&O ban. Can you deconstruct what it means for our viewers? And if a stock is in F&O ban, should one be trading in it at all? Nuresh?
So, say once you're in F&O ban, when the market-wide position limit crosses 95%, it has to go back below the 80% to get out of ban and comes out the next day. But as per the new rules post-COVID, you cannot roll over positions in ban anymore, and that creates a problem. So once you've created a position in such an even before ban, you have a problem around the rollover time. So one has to be careful trading in these names on the derivative side. And once you're in the derivative ban, you cannot buy futures on that day once you're in the ban period. So you can only trade it via the equity segment. So in this case, it becomes a case where stocks get more volatile in a tight range, and every time it keeps coming in and out of the band, there are gap ups and gap downs. So the best way to trade them is to actually look at it from an equity position. So you cannot short it unless it is in when it is in the ban period. So simply put, one can be looking at a little longer term view and looking at it as equity segment trade. On the derivative side, one will have to contend with the volatility, which will continue till the time this situation continues. And Ambuja Cements earlier would not go into the ban as much. It is only post the Adani fiasco wherein it has started going into the derivative ban. So at my current personal view on the stock is at 330 to 360, the bottom is done, and that is a good zone to accumulate for the medium term.
I want to look at Tata Motors. Why? Because there seems to be a mild outperformance which now suddenly is visible. I'm talking about the technical aspect here. Second, globally the JLR supply constraints, which is a chip shortage, now seems to be getting addressed. And when it comes to EV, the Economic Times couple of weeks ago, I think Arjit, my colleague from the Economic Times, did a story that Tata Motors looking at getting another round of capital infusion from new round of investors in their EV business, and that could be at a premium to the last deal, which I think was 15, which happened I think same time last year. Bottom line here is that Tata Motors is doing whatever it takes to address the debt they have. Sandeep, we spoke about Tata Motors that incrementally you've added into Tata Motors. If you have to choose between Mahindra and Mahindra, which has been a core holding of yours, which has worked like a charm, and I'm sure our viewers have benefited because of that call of yours. If one has to choose now between Mahindra and Tata Motors, which way would you lean and why?
If you have to choose, then from a percentage gain perspective, the possibility that Tata Motors will give more gains is greater. Simply because of the fact that as a turnaround happens, the operating leverage tends to play out. So from a company which is already doing well to a company which starts to do well, the operating leverage in the one which starts to do well is much greater. And to that extent, earning surprises can be much bigger in Tata Motors than in Mahindra and Mahindra. So from a pure return perspective, Tata Motors should be able to do better.
What about your outlook, Sandeep, when it comes to the entire defense space, owing to the fact that maybe it was a bit of a disappointment in terms of the budgetary allocation to the defense space, but there have been a lot of other very proactive steps taken by the government through the rest of the year. So your take on some favorites within this pocket?
So what's happened on the defense side is that the stocks ran up rapidly, and in the expectation that the delivery of results will be very, very strong. And then as the results came out, people have seen that the pickup always tends to be slower. So the order books get translated into actual execution over periods of 3, 5, 7 years. And to that extent, some earnings have been below expectations, be it from Bharat Electronics or HAL, etc. So I think that builds in a case for consolidation at this stage rather than strong buying in many of them. And eventually, as we get more moderate levels, or maybe the government will also come out with FPOs, etc., which we don't know, we'll see till March. So I think right now it's a time to just wait and watch and look for opportunities to buy into them.
Okay, and I'm just going back to Tata Motors again because what really caught my attention was Chandra's interview. Owen Chandra, the chairman of Tata Sons, his interaction with the Economic Times, where he is really making a comment on the debt of Tata Motors. Tata Motors as an entity will be debt free by March 2024. Guys, we're talking about net debt here, not total debt. And JLR may need additional few to do so. So roughly 6,000 crore that goes into interest repayment will now generate flows for business, and money from Tata Automotive System is something a company which they're planning to take public will also be beneficial. So bottom line for me is that Tata Motors, according to, I mean, it's a forward guidance, if you frankly ask me, from Chandra, that it will be debt free by FY24. So they are not changing the original plan what they shared with the market before the COVID on when Tata Motors will become net debt free. But in order to reach there, a lot of things have to fall into place. Debt has to come down, JLR demand has to revive, semiconductor shortage needs to be taken care of, margins have to improve, the EV business has to pick up, and the deleveraging what they are planning by a stake sale or by taking a company public, that really needs to be work in progress. So for me, Tata Motors now could be an interesting stock, but it is still work in progress, so to speak. Sandeep, since there is a mention about Indian hotels and the profitability, what they've reported for the quarter gone by, we've discussed this one several times with you. Are you still holding on to your positions?
Yeah, because the performance has been so exceptional that it's taken out all analyst expectations. They have already delivered some, I think, 700 crores of profits in the first 9 months. If you go back to March, April of last year, analysts for this full year were projecting 400, 450 crores of profits. I think the entire hotel industry is in extraordinary sweet spot, which will last at least 2 to 3 years, if not longer, given the demand scenario as well as supply constraints. So I think they are well positioned. So there's no reason to exit your winners at this stage.
Okay, that's the view coming in. Meantime, Rudra, let's get in your take as to what you've made of the movement that we've seen in some of the auto stocks. For instance, you also have M&M that's in the spotlight. Brokerage is pretty upbeat, largely on the back of a steady set of numbers. How are you looking at M&M in particular, and are there any other top bets?
See, for me, M&M on chart has given this breakout above levels of 1,360, 365 zone, and it is consolidating now there. Stock definitely looks very, very strong on chart, and it is a good risk reward to enter at current level. So keeping a stop loss somewhere closer to 1,300, I will take a positional long at current market price or any dips to 1,330, 340 zone, and look at targets closer to 1,500 initially, and eventually it can further move up from there. But however, for me from autos, the top bet would be definitely on Tata Motor. In fact, I even recommended that today. And if you see the F&O positioning in Tata Motor, post the result, that gap up move which came in Tata Motor has been held and it is consolidating now for a long time. This is a clear pattern for me on chart that yes, there is a big move coming up. I won't be surprised to say Tata Motors will be the stock of the year. And for me, risk reward is very favorable. As a trader, for me, this stock has strong accumulation and long-term support zones at around 380 to 400. Current market price is a good level to buy. And once it crosses that range of 485, 490, stock can make a move towards 650 to 700 zone. So technically looks very strong on chart. I will be putting Tata Motors ahead of M&M, even though M&M stock patterns are also good. So, but for me, Tata Motors will be the standout stock for the year. Look at targets of 650 to 700. Keep a stop loss of 380. Buy at current market price or any dips to levels of 430. And this will give a big move for this year.
Right. Okay, Sandeep, before we let you go, let's have some mid or small cap idea that you think our viewers could buy right now.
Sudden question. So,
Yes.
But easy question hai bhai. Easy question hai.
No,
Just ideas.
small and mid caps are tougher because then people buy and then the monitoring becomes tough. So
We'll monitor for you. We'll ask you each time you come whether you still hold or is it a turn to a buy, because the large cap list is we've discussed that time and again. So any mid or larger mid cap that you're still recommending?
See, I think one stock where I bought initially something and then we have increased our allocations lately is a company called Mayur Uniquoters. So they essentially are into uh, PU, PVC products. So they were big in footwear, then they became big in the artificial leather seat covers for cars, etc. So the stock is at the same level at which it used to be 7, 8 years back because of issues related to profitability, slowdown, etc. post COVID. Now they've got large orders from global MNCs, which will start getting executed from next year onwards. So next 2, 3 years, we'll see very strong growth. And valuation wise, I find it reasonable. So it's moved up lately. So depending, so people can take the call accordingly.
Sandeep, thanks as always for joining in and thanks for that idea. Mayur Uniquoters is the stock that Sandeep just recommended. But of course, as always, do your own research. Do speak with your financial advisors before taking any call that our experts talk about on the show. But on that note, let's also get some technical ideas from the mid-cap arena going. And Naresh, what's on your list?
So, looking at L&T Finance Holding, which I've been continuing to like, and now the stock is coming on a much larger breakout. So, the stock has made tops around that 96, 98 mark over the last 3 months, almost 3 times. And over the last 2 years, that has been a major resistance. A strong recovery in the near term, where it went back to 85 levels and has recovered back to 95. Structurally setting up for a big breakout. So, expecting this breakout to take place in the next few sessions. A stop loss at 88 and a target price of 110.
L&T Finance Holding, interesting bit really would be that if one looks at the Reserve Bank of India's communication, it is evidently clear that if not last policy, definitely post the next policy, rates will not go higher. Which means if you look at going back to the basics, which is that NBFCs, they tend to underperform when interest rates are moving higher. They tend to start outperforming when interest rates are nearing a peak or when interest rates they start declining. So are we really nearing that turn where NBFCs, which have underperformed banks, they will start outperforming? Banks do well when interest rates are rising. Why? Because they get access to cheap deposit. NBFCs underperform because they are depending on wholesale deposits. Some NBFCs do get retail deposits, but they tend to underperform when interest rates are rising. So are we at that turn where NBFCs now may do rather well if interest rates are peaking out? That's my limited point.
All right, let's find out those top stock recommendations then and what it is that our chartists are betting on as those pre-open rates have trickled in. 17,859 on the index as we speak. Let's find out what Rudra and Naresh have picked out for the day. And Naresh, your top bets, your mid-cap idea?
So the mid-cap idea continues to be L&T Finance Holding. That looks promising, on verge of a major breakout. It's a 2-year breakout on cards. So L&T Finance Holding could see much more momentum over 98. So a stop loss at 88 and a target price of 110.
Right. Naresh, thanks for once again highlighting your ideas. Rudra, what about your mid-cap strategies?
See, for me, Kirloskar Ferris looks very, very strong on chart and fundamentally a good company. This stock first gave that breakout at around 275 and it has been clearly moving with patterns of higher low and higher high and very, very strong chart pattern with accumulation happening now at around 350 zones. So stock has given breakout again at around levels of 370 and making the 20-day moving average as a strong support zone. I will be looking at initial targets on Kirloskar Ferris at around 450 level, keeping a stop loss of 350. I will buy Kirloskar Ferris at current market price, surely a portfolio stock to have. And for the day, I'm picking up ICICI Bank. Again, this stock has seen good accumulation patterns and F&O open interest addition has been strong on the positive side. So for the day, I will be looking at buying ICICI Bank. 880 one can look at on ICICI Bank, and I'll be keeping a strict stop loss at around 845 for this long call.
All right, there you have it. Those are some recommendations from our chartists. What about the index calls then? Here's what they're advising one should do this